Good morning, everyone. Welcome back to the channel. I'm Ozbourne Foreman, and today we're going to be talking about the average income in the United Kingdom. We've got an article here by This Is Money, and it says, "Where does your income put you amongst Britain's earners? The official statistics reveal where you stand." Now, in the year to March 2022, average income after housing costs hit £500 a week. Figures show 8.8 million people had an income above £1,000 a week in the period. So, of course, you're going to get a relay of what this was before. This equates to £52,000 a year, which put them in the higher tax rate bracket. So 8.8 million people have had an income above £1,000 a week. Notably, and it's mentioned here, most of the data is weekly, and the Office for National Statistics cautions that it's simply multiplying by 52 doesn't give an entirely accurate annual salary, but it does provide an idea of who earns what. Now, I'm intrigued here because I guess you would have to use averages or medians and use them consistently, and that's why obviously multiplying by 52 wouldn't be an effective measure. I suppose for all of us, the best thing we could do is divide our annual salary by 52, and that would therefore give you your weekly income. So what I'm going to do, out of curiosity at the same time, is also divide my income by 52, just to see where I would rank on this. So according to this, I'd probably be somewhere in the 4th or 5th sort of percentile here. And that's just based on my salary alone. Fortunately, there are ways around this and ways of improving your overall income, but we'll be discussing that later on here. It does say here, however, the average median real terms household income before housing costs was £565 a week in the period, which equates to around £29,500 a year. So if you have an annual income of greater than £29,500 a year, you are doing better than the average person, or you're doing better than the median, effectively, which is a good benchmark to start with. It's even more interesting if you perhaps extrapolate your age from this. So if we went, okay, you know what, I'm 23 years of age, this is what I'm currently earning, and this is where I rank. Then, if obviously you're a younger person, you're higher up on the percentiles, that's great. If, however, you might be an older person, you're starting to be quite low on this, perhaps there's a point where you go and reflect, and you're like, well, okay, why am I low on this? What could I do to increase this? How can I improve my overall income? If, especially as an older person, if by improving my overall income, I take on additional risk, it generates excess stress, and it will impact my happiness, then perhaps I should be satisfied with where I am. Perhaps I could find an alternative source of income that might be able to complement what I already do very well. That's where I would stand, certainly at an older age where, for instance, you've got a mortgage, family, all of that you have to support, and therefore wouldn't want to obviously take on too much unnecessary risk. But we've got this table here, and you can see that basically there was 8.8 million individuals with income above £1,000 a week. The average actual income, or the mean, was £688 per week. But because it's an average, it's likely weighted to the extreme. So obviously, because you have such a high amount of individuals with above £1,000 per week, if you have an individual that's earning, £100,000 a week, which is exceptionally rare, because it's such a large number, it's going to pull that number out even just a smidge. Enough individuals with high enough figures above the scale that is represented here is obviously going to yoink that out of proportion. Now, we've also got this table here that says annual net equivalent disposable household income before housing costs by household type at different percentiles of the FYE 2022 UK distribution. In hindsight, I probably shouldn't have read that table, but it basically says, here's your ranking by disposable household income at each percentile. So if you're in the 10th percentile, the bottom 10%, you're a single individual, you'll have a disposable income of £9,800, and that's net, so that is after tax. However, if you are a couple with no children, this is £14,600. Now, if we scale a bit on, let's carry on with single incomes here. To be halfway or be in the 50th percentile, you would need to have a net annual income, so no tax, of £19,700. So if I looked at my salary and I decided, okay, I'm going to times my salary by the rate of tax that I would pay, but then you've got to account for the personal income allowance as well. So you'll need to deduct that from your salary and then times the remaining amount by obviously what it is. So it's that minus 12,500 times 0.8. Let's just say I'm paying 20% tax. Effectively, my disposable annual income would be that plus would be nearly £22,000 there. So I've now worked out that as a single individual, I rank somewhere in between the 50th percentile and that of the 90th percentile, which is quite interesting to see here. So I, as a 23-year-old, rank that far on. But obviously, there are more things we can look at here. If you want to be in the top 10% as a single individual, you need to have an income of £38,400. That's not really that high when you really think about it. If you strive to be in the top 10%, all you need is £38,400. And some people will go on this video and comment and go, well, hang on, it's not easy to earn that money. Really? You're telling me that if you don't work hard, you don't swap jobs regularly, you look to maximize experience at the beginning and really push to work hard in the workplace, you're telling me you can't achieve a salary of that? If I combined my multiple income streams, which is another important factor here, right? Because you've got your annual income from your salary, but you've also got income streams, I would rank much closer to the 90th percentile or the top 10%. In fact, I'd probably wager that I'm probably top 15% for income due to my income streams via YouTube advertising, via my freelance secretarial work, via my pub shifts, via my salary from my employment. That stuff quickly adds up. By having multiple income streams or other business ventures, this gives you an opportunity to rank higher, to earn more money. And that's key because money really is a tool. Money gives you what you would like to achieve. With this money, you can then go out and have freedom or financial independence, which I think should be a goal for most individuals, full stop. You should have the goal to work hard, get enough money so that then you can do what you'd like to do indefinitely for the rest of your life. Hence why I'm building a portfolio where I'm trying to raise the value of the investments to therefore become financial independent. But at that point, I'm not going to retire. At that point, I'd want to go and decide and do what I think matters most to me. Now, this might be saving starving kids in Africa. It might be, charitable work that I get a kick out of because I feel that I'm making a positive impact. Or it might be something I'm incredibly interested in. It might be I want to become a mechanic for motorcycles, right? It gives you the freedom to do as you wish. Notably here, though, if you're a single individual with that annual income of £38,400, if you're a couple with no children, that ranks you significantly further down. You can see here that to be in the top 10% as a couple, you need an income of £57,000, which again is a massive change. For example, a single person with an annual household income of over £38,400 would sit above the 90th percentile on the distribution for the year, implying their income exceeded 90% of the population. But they also break things down by household, which makes a difference to where earnings rank. A couple with 2 children receiving the same level of combined annual household income of £38,400 would lie just below the middle of the income distribution and be considered to have slightly less than the average median household income. The figures also showed how much those on lower incomes need state help to meet a decent living standard. Earnings from a job, for instance, accounted for around a third of gross income for individuals in the first 10% of the population, compared to around 80% for people in the 10th 10%. There are a large number of individuals with household incomes of around 60% of the medium income mark, the DWP said. Those falling below this line are considered to have relative low income. So if we go back up here and we look at this table, and it said here that they fell below that mark, or a lot of people ranked in the 60th percent in median, what kind of a job is going to get you about £339 a week? What kind of individuals are being analysed in this chart here? Are we including pensioners in this chart? Is state pension income, or is it state relief? How are they categorizing this data? To be earning about £340 a week, you're going to be working full time. You're going to be working, well, a 40-hour week typically. And I think a 40-hour week at a minimum wage job is going to rank you about that. When I worked in the pub full time, I mean, we had an interesting setup with contracts in that you're not given or guaranteed a certain amount of hours, but you're given a minimum guarantee of hours. So you'll be rotated on, or you'll be expected to work for, let's say, 30 hours of the week, but you may end up working more than that if obviously trade is good. In those situations, your median or your income is going to be floating around the 60% mark. So it goes to suggest, really, what can you do to exceed that? And really, if you get yourself a full-time office job, I'm sure with steady progression, you can get your income higher than a majority of the total population. And people, again, will ask, but why does that matter? Why compare yourself to others? Comparison is the thief of joy. And realistically, you would like to, or you need to, picture what you want to achieve near the end of the line. What do you want to say, I've done this, and you know what, if I died tomorrow, I'd die happy. What do you need to have done? It might be, I have a bucket list of 100 different items, of experiences, of locations, of things to do. I'd like to achieve that. What facilitates that? Well, I need a ground to fly to Australia. I need to do this. I need to do that. I need money for a lot of these goals. Money gives you the freedom and the option to do what you wish to pursue. With money, you can truly find self-happiness if obviously you're looking for it in the right path. This is what's critical here, and this is why raising your income is very, very important. I'm going to scroll down quite a bit on the article here because they go to one about how in real terms wages have I think they said increased slightly, but they're using March 22 as a comparison, where obviously there was only annual inflation of 4%, which subsequently is much, much higher now, at around about 10.5%. Now, there's a table here, or graph, I should say, and it says income sources as a percentage of gross income. Okay, so gross, this is before tax this time, so they've changed it slightly again, which I find quite interesting here. And you can see here again the population decile, or again what it is. So if you're in the bottom 10% of the population, typically about 35% of your income is earnings. A very, very small sliver, maybe 2%, is investments. Again, miscellaneous is about the same as that. You've got occupational pensions, which really kind of resemble a very similar amount across the board, with obviously the first or the bottom three population deciles being the smallest, but after that point it remains pretty consistent. And state support received is actually over 50% for this lowest group. But when you start to go up a bit and you go to, let's say, the middle point here, you're 60%, or your sixth population decile, you're looking at earnings taking up about 64%. You're looking at state support resembling about 20%. But noticeably, across all of these categories, investments remain very low. Now, this might just be due to the categorization as data, as I've mentioned before. Investments and earnings are a fine line. You might have an investment property that's rented out to, let's say, multiple tenants, and they will pay you an income as rent. That rent could be classified as earnings rather than investment. So perhaps investment in this category is categorized as capital gains, which people will look to avoid where possible. It's interesting. What it does show consistently is that overall, the trend is if you've got more in investments, you're going to be in the higher population decile by statistics. So if you start to invest now, you start to maximize your income and try and increase your earnings potential as best as you can by working hard and learning. Learning is key. Then you can achieve this. Beat the average, beat the median, and do very well for yourself over time. This is why investing is key. This is why I invest in stocks and shares in my ISA portfolio with free trade. I have £26,494.21 in an investment ISA. I am 23 years old. I don't say this to brag, because I don't gain anything from bragging online. I might get a short, oh wow, look how cool I am, but shortly that fades off. The point I'm trying to make here is that I've aggressively saved. I've worked hard. And again, I'm still young, so I expect things are going to get harder as I get older, obviously. The point is that I'm trying as best as I can to maximize what cards I currently have and playing the cards to the best of my ability. By doing so, I hope to achieve a great sum of financial wealth in which I could then use that financial wealth to pursue what really matters the most to me. Obviously, this figure would be much higher. You can see that I am down by £13,500, a majority of which is from my investment in Boohoo, which is down 50% or probably about 13 grand. As you can see, the current value of Boohoo with my 21,816 shares is nearly 13 grand. So I'm down half. That obviously was a mistake of mine and reckless. I could be sat on near 40 grand right now if I'd have just saved in a savings account. But I anticipate that over the longer term, through dedicated investing, paying yourself first, the moment your money arrives in your bank account, a standing order or direct debit is set up so the money goes immediately to investments, and then you have the rest of the money after bills as your discretionary income. This behaviorally impacts your spending. It means you're going to spend less. You're going to feel that you're more skint than you are. This obviously is a form of monk mode. I wouldn't suggest doing this indefinitely. Definitely set up a high standing order, but obviously you want to improve your lifestyle over time, and there's no point subjecting yourself to very bad conditions without a goal or a path or an ambition to remove yourself from those conditions. I, as a person, minimalize the assets around me. Most of my assets are liquid. They're online. I say online. They're digital in a way because it's stocks and shares that are held on a broker. I can cash these out at any moment provided the stock market is open. This gives me the flexibility and the ability to be agile, and agility is key, especially in this day and age. This week alone, my portfolio is up by probably about £1,000 here. It's gone from 24k to, 2 grand. It goes to show that by having investments in the stock market, things can change rapidly and can be a longer term benefit if you're not as stupid as I was and bought at a high price and too much. I had a gambler's fallacy. I bought way too much on the way down, but I only know that in hindsight. Through our mistakes, I think we'll learn more important lessons and become better investors, better individuals, and perhaps find happiness over the longer term. Thank you for watching. Have a fantastic day.